Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Friday, March 8th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts. I'll start with the big picture, weekly bar chart, and then we'll end up with the day itself. But just wanted to show the structure from the July high. And in fact, it was in late December that we tested this 8-month channel top that is now at 250.28, then mentioning that that could be sold, anticipating then full bearish rotation to channel support at 167.35 over the following 3 to 5 months. That happened inside of about 2 months, actually, and we actually did test that channel bottom about 5 weeks ago. Now, it wasn't clearly indicated until we actually closed below rising speed line and channel bottom support. If you recall, if you've been watching the Daily SPY report for the last few months, you know exactly what I'm talking about. So about 5 weeks ago, we did test the 167.34 channel bottom. We tested it actually on the daily chart. It came very close to it inside the 1% zone. We're likely to continue south into the 167.34 region, not necessarily today, but possibly by the end of next week. It has been indicated following, a couple of sell signals. You can see them here actually below the 2/3 speed line and this channel bottom, most notably 184.33, which I have reduced to an intraday resistance level only, giving the market room to breathe and perhaps recover to 190.68 over the next 3 to 5 days, perhaps. But in terms of the day trade itself, it really is 184.33 resistance. And your support, no surprise here, 173.70. That's double bottom support both Wednesday and Thursday of this week. We could trade inside the 173.70 to 184.33 region all day long, perhaps. But just know that that settlement that occurred on Tuesday below the 184.33 channel bottom, and the very same day we also closed below the 2/3 speed line at 190.68, has indeed indicated 167.47 on the daily chart as a 1 to 2 week target. We may see that over the next several days below 184.33. And if we break 173.70 today, in other words, the Wednesday-Thursday low, I think today we will test 167.47. 167.47 is on the daily chart. What is on the weekly chart, this is not an updated chart, my apologies. What is on the weekly chart at 167.34. So it really all comes together in about a 13-cent range between 167.34 and 167.47, where we could bottom out not only through next week, but even through the second quarter, because holding above this channel bottom, and as we're testing it, if we're testing it, by the way, you could reach for 205 or 210, 215 strike. I'd say 210, strike the middle here. 210 strike out of the money calls that don't expire for at least, I would call this a 3 to 5 week target following a test of 167.34. This 205.27, 215.52 region. 215.52 is a new descending 1/3 speed line, trend defining its own right, that is based in part on this week's low. And this area is narrowing and dropping gradually. It all comes together in about 4 weeks. It can absorb buying through March into April, and from here we can fall away again. In fact, it really is the 167.34 floor to 215.52 ceiling that I consider the parameters as we move through March and even through April trade. Now, the likelier outcome from at this point in time is holding above 167.34, that we would see a settlement above 215.52, this speed line, at some point in the coming weeks. And if so, that then does in fact clearly indicate the low 250s resistance. But also keep in mind, as I mentioned at the top of this video, that merely testing channel support, you can set up a trade that would anticipate the low 250s dropping gradually as a 2 to 3, 3 to 5 month target. In other words, as we're testing the 167.34 support, you may then reach for the 245 or 250 strike out of the money calls that don't expire. I would go at least 6 months out, maybe a year out on that. And obviously, as the market is dropping into this zone, those calls are getting a little cheaper and a little cheaper for each drop. Each tick drop should result in a slightly lower price on those out of the money calls. And that would be a good opportunity to go long at that point in time. You could also wait to buy on strength. The only problem is buying on strength at this point in time, from my point of view, would be a settlement above 215.52, which brings up the 3 to 5 week time frame once again, that as we're testing 167.34, you may reach for 210, 215 strike out of the money calls that don't expire. I would go a couple of months out on that expiration. That is about a 3 to 5 week play. Now, if we do close this week, that is today, and I don't see it happening today, but you never know. If we do close today below 167.34, that channel bottom, it does need to be by a full 1% margin for what I call technical clarity or technical reliability. And that would be a 165.67 settlement price today, Friday. And if we're trading well below that or below that as we're coming into the final minutes of the day, you may, well, first off, if you've got any of those out of the money calls, if you bought those over the last month, month and a half or so, you should probably liquidate them entirely. And you may then consider also reaching for 90 strike, 95 strike, 100 strike out of the money puts that don't expire for at least 6 months. Now, I'm giving you broad brushstroke option recommendations. There are a multitude of things you can do to take advantage of a down move. You could buy a calendar spread. You could buy a vertical spread, a vertical put spread, a vertical put back spread. I mean, butterflies, so forth and so on. And if you've been trading options for a long time, you know exactly what I'm talking about. It's just that, I don't want to get too deep in the weeds on that in this particular video. This is a daily video on Tesla analysis. So in terms of the basic option strategy, closing at 165.67 today or lower, you could reach for 90 strike out of the money puts that don't expire. I would go a year out on that. That's probably a 2 to 3 month move to the downside, but it could take a little longer. Let's get back to the day itself. We do have 173.70. That is our intraday support. We have 184.33. That is this former channel bottom on the daily chart that goes back to that February low. This was a 3-star support. Before we close below it in a high volatility move, I'm letting the market, if you will, give it some breathing room, allowing it to retrace back to 190.68 over the coming days, and then perhaps fall away again in the following week or two back to 167.47. 190.68 I consider sort of a midpoint right now, a 3-star resistance that can contain buying through next week, and once tested we could fall away again back into the mid to upper 160s within a week or two of doing so. It would be a settlement above 190.68 that I think would then clearly indicate within a week, 2 at the most, 205.10, which is a new channel structure on the daily chart. And on the weekly chart, we show it in combination with 215.52, a descending 1/3 speed line. This area, and I'll go back to this chart, if we were to close today above 190.68, and I don't see that happening, but if over the coming days we did, then you can expect, 3 to 5 days, 2 weeks at the most, 205.10, part of a range of resistance up to 215.52 that can, by that point in time, absorb buying through April, and from there we can fall back to channel support again within 3 to 5 weeks. I think I've outlined that pretty well, but I will go back to this chart. 190.68 is in reach today, perhaps, if we push through 184.33. I think the likelier outcome would be a settlement above 184.33 that would then indicate a Monday, Tuesday test of 190.68, where we could top out through next week once again, and once tested, fall back to 167.47 within a week or two. Downside today, breaking or opening below 173.70. Expect 167.47. Part of a narrow range down to 167.34 that can absorb selling through the second quarter. And once tested, we can round back up to channel resistance in the low 250s within 3 to 5 months of testing it. But once again, last thing I will say, closing 165.67 today or lower. No good reason to be long Tesla as we move through the second quarter. We should continue unwinding all the way back into the low 90s and dropping over the following 2 to 3 months. Please click like, share, subscribe. Check out wickedstocks.com. We put out 2 stock picks this week. the Dollar Tree and Micron. So Micron came out on Thursday. You want to check out both of them. You can do it for free by going to wickedstocks.com. We offer a 5-day free trial up front. And with that 5 days, you also get our daily triple Q and our daily SPY analysis. The triple Q, the NASDAQ 100 ETF, is approaching significant overhead price ceiling that we've been targeting now since early November. You should apprise yourself of that because it does have bearing on many of the stocks that you're trading, including Tesla. I'm going to leave it at that for, what is this? Friday's Tesla report. I'll be back Sunday afternoon with Mondays, and you have a great weekend.